It's a gap-up start for the Indian market following a strong hand coming in from the Wall Street. Banks, IT lead as all sectors traded the greens. Nifty reclaims that 17,300 mark, though we're mildly off the highs.
Infosys largely meets expectations in the second quarter. They raised the full-year revenue guidance, even as they lower the upper end of the margin forecast. The board also clears a 9,300 crore rupee buyback offer. MD and CEO Salil Parekh tells CNBC-TV18 that the order pipeline remains steady and there is good visibility on growth.
Mindtree delivers an all-round beat in the second quarter. Brokerages Morgan Stanley and Nomura raised targets. Science slips as revenue and margins miss street expectations, although the company has maintained guidance for FY23.
Angel One surges after posting record revenue in the second quarter. Anand Rathi Wealth 2 trades higher after a strong set of numbers in the second quarter.
Power Mech Projects wins an order worth nearly 500 crore coming in from the Bangalore Metro Rail Corporation. Inox Leisure trades higher after the shareholders approve of its merger with PVR.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangalam Malu. Well, Mangalam, it's been a while, right? Since at around 10:30 a.m. we have the markets trading with such big gains. The problem is we have come off a little bit from the top, but let's see how things go from here. But quite a good thing. On a Friday, you have the bulls that are parting, at least till now. But Manas Jaiswal joins in. Hi, Manas. Well, things are looking pretty good, at least. The long-awaited bounce came in the U.S. markets. But how do you trade the Nifty from here? We have come off close to around 50 points in the day's stop. Is it providing a fresh re-entry opportunity? Or do you think slippy slide back to around that 17,000 odd?
Good morning, Nigel. So, yes, we have seen a opening, but all of the buying is not coming. So, that is why I think now one should trade long position if Nifty breaks 17,000. Before that, I think one should be very much cautious. And if Nifty breaks 17,250 on the downside, then definitely if you have already taken long position, then you have to exit. If Nifty breaks 17,250 on the downside, I think one should keep the eye on these two numbers: 17,250 on the downside and 17,350 on the upside. So I don't have any strategy right now on Nifty, but yes, stock specific you can definitely take trade. So I think first one is the buy call on LTI, because we have seen buying interest in most of the IT stocks. LTI has given a fresh breakout and the stock has been making higher tops and higher bottoms from the level of around 4,300. So take a long position in LTI. Stop loss should be around 47.19 and target would be around 49.25. Second is the sell call on India Cement, because India Cement is continuously facing resistance on high levels near its 20-day moving average. And since today's stock has broken its 50-day moving average, I believe that the stock can go down and test 220. So take a short call here. Stop loss should be around 241.
All right, we take that point on those individual stocks. In fact, India Cements is now down 15% for this week itself. And the broader markets, even though they're up about 1% for the index, a lot of these stocks are actually coming off sharply from the highs. We have Bata, which has slipped to the low point of trade. HDFC, AMC too has moved into the red. Jubilant Foodworks, for instance, had been doing okay-ish so far in today's trading session, but now has come off sharply, currently sitting at the low point for that stock as well, just above that green line. So we'll keep an eye out on these stocks. 17,250 is the level that has been spoken about technically, but let's also talk about an idea for profit coming in from our colleagues at Money Control Pro. Jitendra Gupta joins in with something that he's been tracking.
I think one can look at Bharat Electronics in light of strong earnings visibility, order book pickup in execution, and of course supportive valuations. Companies like Bharat Electronics have been big beneficiary of government's indigenization programs. Its order book currently stands at around 55,000 crore, close to 4 times its annual revenue, which provides very good revenue visibility. Importantly, if you look at the order pipeline, is quite strong. Many large projects post the COVID late stage were delayed, and projects such as Akash Prime, QRSM, which is worth about 30-40,000 crore, MRSM, Akash Missiles, and many of them have been are in the pipeline and are supposed to be awarded sooner or later. Apart from orders, the other notable point is that the execution and collection cycle has improved significantly, leading to higher cash flows and earnings. For instance, in June quarter, if you look at the company's revenue, more than doubled and profit jumped to rupees 356 crore as against 13 crore net profit in the corresponding quarter last year. In terms of valuation, it is trading at around 23 times its fiscal 24 estimated earnings, offering a dividend yield of close to 3%, which is quite reasonable considering cash in the book, superior return ratios, uptick in business, strong order book, and of course, earnings visibility.
All right, thanks a lot for that, Jitendra. Well, for the time being, we'll slip into a short break. On the other side, we'll get chatting with the management of KPI Green Energy. He'll be joining in to detail how business is shaping up.
Welcome back. Let's, as promised, get chatting with the management of KPI Energy. Now, the reason why the stock is in focus is because they've recently received a commissioning certificate from the Gujarat Energy Development Agency for a 6 megawatt solar power project, and they have been doing so for the last few days as well. As a result of which, the stock is has done well, has been doing well. It's at the high point. They also plan to increase their installed capacity to 1,000 megawatts from close to around the 200 plus megawatts that they have right now. Faruk Patel, who's the chairman and MD of the company, joins us to discuss all of this and more. Thanks a lot, Mr. Patel, for joining in. Your current capacity, as we see, is a little over 200 megawatts. What does it stand at by the end of this year? And by when do you get to the targeted 1,000 megawatts?
Well, good morning to you people, and thank you very much for joining me. More than 200 megawatt already energized, and the end of this year, financial year, will be the 300 more. And the as you say, when we get the 1,000 megawatt, it will be the calendar year of 27. We will be reaching to the 1,000 megawatt, inshallah, 100%.
Okay, all right.
And revenue will be same. Revenue will be the increase like in the same moment. Say 200 will go to more than 1,000 CR by the 27 and calendar year.
Okay, all right. And do you want to split this up as well in terms of how much of it will be, say, central government, the governments, and how much of that could be state governments? If you could tell us in terms of this capacity addition from 200, you're going to go to 1,000, and you're saying, yeah, go ahead.
Capacity. Sorry. Capacity, when you say the capacity, it is only the state government capacity, what we are using. The policy of, say, Gujarat government. And there is a two segment. One is the IPP and one is the CPP. IPP, where we are selling the power in a third party. And CPP, where we are making the plant for the CPP customer and getting the revenue for 25 years as a lease and O&M. So in both thing, we have the annuity income also. We are planned and we are success in that. Today we can say the 100 CR is a annuity income already. We have booked till the 25 years from today's capacity. It will be increased by 27 5 times. I hope so.
All right. Okay. So by 2027, as you're saying, your revenue will go to 1,000 crores, right? How much of that will be split up between the two that you told us, CPP and IPP?
CPP and IPP, CPP 750 and IPP will be 250, which we are planning today. It might go up. So you can say that in a revenue stream also, there is one is a fixed revenue and one is the contract revenue. The contract revenue, fixed revenue today is 100 CR plus with the O&M and the lease plus the sale of power from the IPP business. The second one is a contract revenue, where one time we are making the plan for the CPP customer and we are getting the revenue from them.
All right,
so
we take that
this
point.
The same model. There's the same model which we are getting today from the say end of this financial year is 300 megawatt and revenue will be the annuity income, you can say, for the company. It will be the 100 CR, which will be annuity income will be the 3 times than the today's.
Okay.
By 27 calendar year.
We take that point. So you're saying that by the end of this year, on a 300 megawatt capacity, your annuity income will be 100 crore, and which is something in proportion with even your FY27 targets be 25% of your overall revenue. So are you saying that this year you will end with 500 crores on the top line?
Yes, you can say that. We have already planned on that. and the top line and bottom line both are the, you can see the freeze, because the order in hand today is more than the 100 megawatt in CPP, and we are putting the plan for the IPP is more than the, say, 30 megawatt. Out of 30 megawatt, 16.1 already we have started as a hybrid. So it is well up to the target.
We take that point, but you are talking about increasing your capacity, etc., and the 1,000 crore revenue target that you have by 2027. Those are from existing businesses. You also wanted to diversify into solar rooftops, and you've spoken about wind solar hybrid. Will you look at all these alternate streams as well, or will you stick to the business that you are currently in, which is your CPP and IPP?
CPP and IPP both are in the say renewable energy only. When we say the renewable energy, it 100% include the solar and wind. The hybrid policy is supporting till the next year June. After that also they will continue with the hybrid policy, and we have so many things in our kitty and in a pipeline, so we can reach up to the 1,000 megawatts without fail, and the revenue will solar, wind, and hybrid also. Okay. And for your knowledge only, I'm putting some good note for your company, is that we have already 860 megawatt evacuation in our hand today.
Okay. All right. Mr. Patel, your margins have been quite all over the place. I think, in the last quarter is around 33%. I'm seeing sometimes it's 40, 45% odd. What's the steady state margins that we should be working with? That's point number one. And also your working capital days, well, they came down to around 100 if I look at it in the past year. Earlier it was higher as well in that one-off year that we had. Tell us, what is the steady state working capital days that we should be working with?
See, margin for the IPP, of course, the EBITDA of the IPP is more than the 76%, and the CPP is little down because it's a contract, of course. But at the same time, we are getting the lease and the O&M for 25 years from there, so we will get the revenue till 25 years from the CPP. So you can say altogether 76% EBITDA and 33% EBITDA, which gives us the very good margin. And of course the tax portion from the CPP collection means a CPP profit, where the dilution in the IPP depreciation, number one. Number two, that whatever we are getting the orders, that in a CPP more than the in IPP we are working today. That's why the as you say, the bank facility we are not using much, because the when we are getting the order is of course on the basis of the some milestone, that company who are putting their own power, they are giving us the money in a time. That's why the 100 days debitors and all the things are gone down. Yes.
Take that point. Another thing, Mr. Patel, what rate are you selling solar power at, and how does that compare with the grid rate? I mean, just wanted to understand, because if companies are looking at reducing their power costs, then they would expect your rates to be lower than the grid rate, right?
Of course, you are right. And our model is a success from last 74 months. We got the already. We are selling the power in a market, and our customer, as you know, you can go and see, we have a A-graded company like L&T and all, which we are supplying the power.
We understand that. Just wanted to know the rate. What is your per unit selling rate of power?
The average realization rate you can see on the board only. But I can say one thing, that we are giving the discount on the DISCOM rate. And that is 7%, 8%, 9%. That's the clue I can give.
So DISCOM rate is around 9 to 10 odd rupees. Are you selling between 6 to 7 rupees? Just wanted to understand per unit.
We are giving the discount 70 paisa, 80 paisa, or up to the 1 rupee.
Okay, 70 to 80 paisa up to 1 rupee. And solar also requires a lot of land, right? So you would be sitting on a huge land bank. What is the kind of land bank that you're sitting on?
See, that's my average thing. that your company having today more than the 500-acre land are their own, and the 1500-acre land as per the lease and all the things. So altogether we have 1800 to 2000 acre land in our kitty also.
And
That's a very
how
good
much of that is being used as of
Thank you.
today? Out of the 2,000 acres land, how much is being used?
It's a very simple calculation. 300 into say 3.5.
Okay,
so
1,000 is being used.
Yeah,
1,000 is being used.
1,000 has been used.
Final question, Mr.
Yes,
Patel.
yes.
I'm not sure whether you've done any dilution, but I think the promoter holding has been increasing in the last few years. Was there any preference, or have you been buying from the open market? I'm not too sure on that front, but if I look
I'm buying.
Yeah, you're buying. Okay, then you're buying from, you know, March 2019, you were at around 51%. Today, you're at around 55%.
It is my promise.
Yeah, go ahead.
It is my promise to the. It is my promise that we are. I am buying from the market. Number one. Number two. I am whatever I am getting as a dividend. I'm investing in the means our company share only.
Okay,
That's the best thing what I have today.
Just to get back to your promise, what is your promise from 55%? Where does it go to?
See, of course, I always think bigger numbers, but I'm not saying today that how much percentage I'm going to buy. Whatever I have the money in my account, I always buy a KPI and KP Group share only. That's it.
All right.
Okay, so you're not giving us a target holding then, right? But you're a buyer at current levels as well. Your intent.
If you say, if today's position I can have the 100%, I am the happiest person in the world.
Okay, all right. We didn't get a number from you, Mr. Patel. We would have appreciated that, but you're sounding fairly optimistic on business, and you've said all the dividend that you've received or any kind of income, you've been using it to buy some shares. We look forward to chatting up with you, and we'll hold you on these numbers that you've given. For the time being, you're talking about scaling up business to around 1,000 megawatt from around 200 plus megawatt that you're sitting at, and you're sounding reasonably optimistic as well on the prospects. Thanks so much for joining in. For the time being, we'll slip into a short break. Come back, we continue to focus on markets and stock-specific action. Intraday dip, but that's got bought into, and that's thanks to Infosys. You know, intraday it came down 1% from the top, but that's still holding its ground as we speak. But let's focus on mid-cap IT. Mindtree is clocking gains on the back of an all-round beat in the second quarter. Rima standing by to run us through what aided the performance and what are brokerages making of these numbers as well. Rima.
Well, Ambit called it a perfect quarter, but the outlook is a bit hazy. So Q2 numbers by Mindtree have delivered a beat on all parameters, and that's the reason why brokerages too have gone ahead and raised the target price. So Morgan Stanley raises the target price to 3,400, Nomura to 3,180. But in terms of the rating, you would see it's largely neutral, and that's on account of the high valuations Mindtree trades at. It trades at the valuations of large cap peers and even more than that. Actual numbers, dollar revenue growth of 5.7%. Constant currency revenue growth is more than 7%. That's a fantastic number, much higher than street expectations. The company's EBIT margins were flat. The street was anticipating a decline in margins due to wage hikes, but the company was able to absorb the impact of wage hikes and report margins of 19.2%. That said, although this was a perfect quarter, it's a beat on all counts. Even the deal wins, etc., everything looked good. The only issue is the management commentary was a bit circumspect about the outlook. So one, retail is a large portion of their client. They've been seeing ramp downs in a couple of their retail clients. That, the management said, has ended. But in Q3, there will be some furloughs in the retail client. But they also called out a couple of the other sectors like manufacturing, logistics, or Europe. So the management was a little more cautious. So we need to watch for the growth in H2 of this year as well as FY22. So all in all, it's a good quarter that's come through from Mindtree, and the stock, of course, is reacting to that.
Take that